Ibrahim, Will was telling us that the Aussie dollar is rallying into the RBA decision, even if they only do 25 basis points. Are they going to leave the door so wide open that you could literally drive a truck through it?
So, yes, in a nutshell, I think on the RBA itself, inflation has been persistent, maybe beyond the expectations of the RBA, which has obviously put the idea of a pause into play a while ago now. But that means if they are to be prudent and with that expectation of China reopening, maybe some further support for commodity prices down the road, they certainly would do well to allow themselves some leeway to react, and that allows for potentially a couple more 25 basis point increases down the road. That being said, I think they will stay data dependent. We have seen the housing market weaken. We ourselves are not particularly optimistic about growth in Australia over the course of this year. So I don't think it will be a commitment to hike in any forceful manner in the future.
But you were saying during the ad break that you think that you've sort of missed that trade. So what's the next level from here?
So we think for Aussie dollar, we actually see a bit more of a setback. And that's to some degree because we think we'll see a bit of a pause in those China reopening trades. We think that positions in the Aussie dollar were fairly popular in that context, or at least some of the short positioning has been squeezed out. As I said, we think the dollar will rebound. So we think 67 is what we would be looking towards. But it does matter what happens to broader risk sentiment in equity markets. There too, we think it's probably more a pause or a range-bound phase for now. But if we see a return to the positive trend we had earlier in the year, we might well see the Aussie dollar surprise again on the upside, where again, we had probably been unduly pessimistic to start the year.
Ibrahim, I'm going to give you something else that's probably going to be a big one to unpack as well, because obviously as goes the US rate, so does the pressure getting applied on Japan's yield curve control. We're getting a raft of comments suggesting that we could get an announcement as to the nominees next week. But what's your expectations on the yen? Because I suppose it would all come down to how, what's a good word, boisterous, or how vociferously the BOJ would be looking to either abolish or shift the goalpost when it does come to the YCC.
Yes, so we do think that the differential between the US and Japanese interest rates have been by far the single most important driver of dollar yen. That continues to be the case. It was the case on the way up. It's still the case on the way down. But when it comes to what is driving that interest rate differential, I would put the weight on actually what's happening with Japanese inflation, and the BOJ will react to it. At this point, we know they're ready to move away from yield curve control down the road. What we're a little less certain about is how quickly inflation in Japan will in fact move up. We had some wage numbers earlier today. We get national inflation later this week. But the question is, could inflation in Japan in fact be peaking the way it's peaked in many other places over the last 6 months? Net, we think dollar yen is going to move significantly down over the course of the year. But in the very short term, again, we think the dollar trend and the rates trend in the US will dominate. So we'll see a tiny bit of upside followed by more significant downside over the course of the year.